Hey, Trader Tim here from EminiMind. I'm doing a Monday market analysis for the E-mini S&P. We're at a big inflection point here on the daily chart, even on bigger so on the weekly chart. We're at the halfway back short from last year's highs to lows, and we traded there once before, and had a little bit of selling, and then we came to the halfway back long, the 38.20, and then have bounced, and we're now up at the halfway back short again. The this other 50% down at the bottom is just the full halfway back from the COVID lows to all-time highs. And so we're kind of in this junction where we've got the long below us that has bounced. We have the short that is now right above us, and that's getting a little bit of selling pressure, but not a huge sell-off. We also have this second retracement long that has bounced, and anytime you trade at a 50% retracement, I'm using the negative 23 as the target. So if you're using your fib tool, you don't have to have all the fibs on there. It kind of clutters up your screen. I'm just using the 50, the 6018, and then the minus 236. And I also have this minus 618. And I make those a little bit lighter just so they don't clutter up my screen quite as much. But the thing I wanted to point out is that on this run up from our most recent long here, we've had a really nice series of daily 50% longs. So we've traded at 39.11, made it up to the target. On the way, we even had another daily in between, and then so like two retracements on the way. And then now here we are to notice how we didn't pull back to the 50%. Once we hit the negative 23% target, we kept going higher last week through the Fed meeting announcement and out the other side. And then a little bit of a pullback, and we're at the next halfway back long. So it'll be very critical at this point because this 41.55 is a large 50% short, and there could be some selling pressure, but I would use this 40.97 as the 61.8, so a close below that would start to get a little bit bearish. If we break the swing low down here, which is 40.2950, that would be the point at which I would consider taking a short on a bounce. Not selling a breakdown, but rather if we broke down below this level here, drawing up a short and taking a bounce, taking a short on the bounce is where I would look. But the challenge with being in between two 50% like this is on the way down, we're going to end up having this next 50% come into play. Usually, when you're between two 50%, the middle of the range doesn't really have any sort of major support. So like this, in this case, it's a 4,000. So that is kind of a big round number, but it would not be surprising if we were to just hold this 50% up here and move higher and kind of trade all the way to the 61.8 of the larger short. Or on the flip side, another possibility is that if we do start to slide lower, that we really don't get a whole lot of support on the way down. We just kind of come back down to this 38.21. Now that being said, last week the Fed meeting announcement, market rallied the day before and the day of and the day after, and then a little bit of a selling on Friday, just kind of intraday, and then uh, today as well, a little bit of a gap down. So we kind of had the gap up, a little bit of sell off, but like look intraday, see these candles. So this was Friday. We actually gapped down and then rallied and then gave it all back. So there's definitely some profit taking, and this 50% is definitely a big potential resistance point. Now, if we look at the downtrend line going back from those same highs, we have clearly had a break and we have clearly broken this swing high. So that even though the short is a big drawing, like it's a big level, it's a long period of time. All of last year is where the two anchor points are attached to. With the way the market reacted through this first Fed meeting this year, and with all of these blockbuster earnings and huge, just all these companies beating expectations, huge profits. There's really the jobs reports is beating expectations. There's a lot of positivity in the economy that may rub off here on the stock market. I think what's going to happen as far as a catalyst for a sell-off, it's not going to be inflation based. A lot of those numbers and prices are kind of already people have already accepted them. The higher price of groceries, higher price of gas, the things like mortgage rates. Okay, rates have been 6-7% for 5-6 months now, and so people are now adjusted to those prices. So when they come back into the market and they start looking at houses, a 6% interest rate is just kind of the new baseline. And so what would shake up the market to have a bigger sell-off would be some sort of catalyst, more likely related to some kind of global world tensions. China, Russia, some of these bigger you know, political issues that could escalate into some physical conflict or the threat of physical conflict. So a lot of times those are the curveballs. Those curveballs are the things that can send the market down, as opposed to oh, inflation's going up, inflation's going up. The stock market has to go down. That's not how things work when it comes to you hear a news report and the stock market should do this, or what you expect is not what actually happens. And so if you're day trading, you really don't need to be concerned with the news, with all the stuff that's going on the kind of the economic front. We're only concerned about the chart. If you're taking these retracements, just like we do intraday taking retracements, you can come to the daily chart. You can use options are really good on the daily chart because you're buying calls when the market is down. You're getting them cheaper. You're buying puts when the market is up, so you're getting them cheaper. And you have limited risk and unlimited upside. So options on the daily halfway backs are really good. Exiting at the -23 is a great place because you're selling your calls into strength, or you're selling your puts into weakness. So everything that we do on the intraday chart works on the larger time frame as well. And if you don't have the time to trade intraday, or you just prefer to slow it down on the daily chart and trade the larger time frame, then that's a great option. I think the intraday trading has this appeal of like I can make a lot more money intraday. That's not always the case. I've had plenty of big winning trades and made a lot of money swing trading. Just the same as day trading, but you certainly don't have to day trade to gain consistency or make money. In a lot of ways, day trading can sometimes be a challenge for folks because there's so much information to process, and you have to be able to slow it down, filter it out, just zoom in and look at your setup and your lens. Like put on some blinders and only look at the things that are helping you enter, manage, or exit a trade, and ignore everything else. So I did want to touch on a trade from Friday. I talked a little bit about it in the Discord, but I thought I'd cover it here in the video because it's a little bit easier to make sense of. So on Friday, we had a gap down. I actually did have some puts on, and I closed them on the gap down because I saw the VIX was also down. So the volatility indicator was not showing that volatility was, or the fear, that fear was not in the market at that point in time. We gapped down. The internals were a little bit bearish, but not super bearish. And so I just, once again, all of these gap downs have been met with buying. Here's Friday. Look at this morning. We had a little bit of a sell-off, but then immediately bought up. Now, today's mostly been a sideways day, but still, it wasn't a gap down and then a continued sell-off. If we go back to Thursday, we had a little bit of a gap up and then just continued on. So all of these days as of last week around the Fed meeting have been pretty bullish. And so last week on Friday, we had a little gap down. We came up, we filled the gap. So we traded at the prior day's close fairly early in the day. We traded right here at the close of Thursday. And it was at that point that we sold off. I drew the halfway back long. And intraday, when you draw up a retracement, if you just break the 61.8, that's usually enough of a failure to constitute a failure. So on a daily chart, if this was a daily chart and not a intraday chart, I want to see a close below the 61.8 to really solidify the break in trend. So the daily chart, the closes have a lot more weight of the candles than they do intraday. But Friday, we sold off. We actually did break the 61.8 and then rallied. Then we broke it again on the next candle, 5-minute candle, and then we rallied. And so that was actually pretty bullish. If the sellers wanted to take the market lower, this was their chance. We filled the gap, and sellers usually will come in at that point once you close the gap if you're gapping down. Once you break the 61.8, that's another spot you would expect sellers to come in if it's a failure of a long. Both of those points didn't happen, and we did not get that follow through to the downside. We held the low of the day, and we didn't even come close to retesting it. And so when we rallied here, I drew up a long. We came up close to highs. We did not have a high nicey tick, so there wasn't the threat of it being the high of the day. I drew up the retracement long like this, just from the swing low to swing high, and then took the 50%. It was just below the 30-minute high. Usually I like to line up or have it line up where the 50% and the 30-minute high are the same, but this one was just slightly lower. It was a little bit anticipatory because the breakout hadn't happened yet, but if you wait until the trend is super clear, it's oftentimes too late or most of the move has already happened. So a lot of times it's best to get into a trade when the trend is not the clearest. Like you can identify the trend pretty early with this style of trading. So you don't need a whole lot of time to go by before you can make a decision. And making quick, snappy decisions is super important in trading, whether it's getting into a trade or managing a trade. That's why knowing where your targets are going to be, how you're going to trail your stop is just as important as knowing where your stops are, because sometimes you get in the trade and it just goes in your favor right away. And if you just panic and sell out for a point, you basically wasted your time. So this one got a nice like 10-point move before it got a little bit deeper pullback. And so just by trailing swing lows, you can catch a really nice move with very low risk and just very low stress level. So that was the trade on Friday. And then today there really was not a whole lot happening. Like I said, it was mostly a sideways day, so I didn't have anything there. But as we are now through the Fed meeting and we are at this larger halfway back short, should be a good week of trades. We're either going to, today we're just about closed here, about 20 minutes or so. So let's say we close today in kind of this dragonfly spinning top. I was going to say dragonfly doji, but it's more of a spinning top. Then if we break today's high tomorrow, that could really send us moving higher. If we come up to the 50% short and then it's immediately sold at that level, then I would watch for the low of today to break. And so, the prior day or the last couple of days of highs and lows on the daily chart really come into play when you're trading intraday. And if you can just focus on a handful of, zones or areas like the prior day's close, the high and low for the prior day, the 30-minute high and low for the current day. That's really all you need to kind of gauge and set a framework for the day. The market internals are really helpful. The nicey tick is really helpful if you're trading the ES, but you don't have to really overcomplicate it and add all of these layers and complication on top of it. So keep things simple and work smarter. And if you really focus in on one market in one time frame, that's the way to work smart and accelerate your learning, because you're looking at the same thing day after day, and you start to pick up those patterns and kind of build that intuition to be able to take this kind of a trade with a lot more confidence than just drawing up any old retracement and just hoping that it works out. So I hope you have a great week, and I'll talk to you soon.